Good morning, guys. Today is April 1st, 2018, and I'm getting on live video to share with you guys that I've been trading for 4 years now and just can't figure this Forex markets out. It's taking all my money. I'm going broke, and I don't think I'm going to continue to trade. Great thing it's April 1st because that was just an April Fool's joke. Gotta have some humor in this, guys. No, but today is Sunday. Sunday's a great day to sit down and analyze the markets for the current week ahead, guys. So on the first of every single month, I go through a range of currency pairs and I analyze them based off the monthly time frame to see if there's anything out of the ordinary going on in the markets. Okay, I choose to start with the higher time frame because that's the way my mentors taught me, and it gives you a brighter range of analysis and more key levels and more price action going on. So this pair, of course, is the Aussie versus the New Zealand dollar, guys. And as you see, we've been on a monthly time frame just in a sluggish downtrend, right? Where as of November 1st, 2013, we broke below 1.100. We came back up to retest it. We've just been ranging from 1.100 to 1.000 for the last 4.5, coming up on 5 years, guys. But on a monthly time frame, if you start with your trend line from up here and you draw your trend line down, you'll notice that on March 1st, 2017, as well as February 1st, 2017, these two monthly candles provided us with a clear breakout out of the downtrend, which is my first signal as far as looking for longs. But we don't execute off the monthly time frame. We simply use it to give us a sense of direction. Now, also on the monthly time frame, as you see, if I zoom in, we have our low here. We have another higher low, as well as another higher low here, and a clear retest to the pip of this broken trend line. Whenever price breaks out of a major trend line, guys, you have to understand it's always going to come back and retest it, okay? So it retested it with a doji, and here we have a 3-pin pattern. As you see, 1, 2, 3, and another push higher. Now, this is the monthly time frame. Once again, we don't execute off the monthly time frame. So this just gives us a clear bias as to which way we should be trading, okay? Last month, which was March, we did end with a bearish candle here, and we did break below all moving averages, below 1.075, which now holds as resistance, okay? So what I want to do at this point is now drop down to the weekly time frame. So let's take a look at the weekly time frame, guys. As you see, it's clear low, higher low here, retest. And it looks like price wants to come down and actually form another higher low here, as last week's candle closure was bearish, of course. The week before was definitely bearish. The last 3 weeks have been bearish, guys. But what caught my attention is this. One of my favorite tools in the foreign exchange markets is the Fibonacci tool. So if I take my low here and my high here to measure price, we are now testing the 78.6% Fibonacci level, which price, I'll draw a small level of support here directly on that Fibonacci as well. Price at 1.0572, we have the low of last week. So this upcoming week, guys, I'm definitely going to be watching these levels here to see what happens, because if we get a weekly closure below this, if we break weekly support of 1.0500 as well as the trend line, even though I don't like to short low, this is definitely going to continue bearish. But my personal opinion and what I see on the chart is We broke out to form a high. We retested trend line. We made another higher high. Now we're retesting support in a major confluence zone, guys. But once again, we don't execute off the weekly time frame. Now, looking at price on the weekly time frame as well, we are closed below our 50-day moving average, our 21-day, as well as our 8-day moving average. Looks like the 50 is coming along to pointing to the downside, okay? So let's drop down to the daily chart to see what's up with this pair for the week ahead. Now, on the daily time frame, as you see here, guys, let me zoom right in. You see how price reacted much differently than it normally does once we hit key zones. This bullish daily candle here engulfed the previous day's candle, right? And there's no wick to the bottom. There's no indecision as to oppose who is looking to take control of the markets. And then here we do have an inverted hammer the next day closing below our 8-day moving average. And then finally Friday we did close bullish. So let's zoom out on the daily time frame because this is really what we want to be looking at. So our daily time frame, what I want to do is take another trend line on the daily, use the top of this wick here, and try to connect all wicks without going through a candle. There. One simple trend line can tell you a lot about the markets. So this is a if equals then trade. If equals then. So if price can clearly break out of this range on a daily level, and then come back down to retest this resistance level and hold, I will be looking for the start of a new bull trend all the way up to 1.1250. Now, of course, there's a lot of different rules that comes with this. Price must hold above all moving averages. We must break trend line. The 78.6 on a daily level must hold as support. And looking at this, guys, which also gives me more confluence. I don't know if any of you guys trade the AB CD retracements, but we have an A leg here, A to B, and let me zoom in for you guys. So I have my A leg here, my B leg here. Price looks like it shot up on a daily time frame, maybe to test like the 38.2 or 50%, which those levels are not on my Fibonacci. But as you see, the 27% Fibonacci extension is where on a daily time frame price has completed. So if price does not hold in this range and breaks, most likely we'll be targeting 1.0400 as our last extension level, as this negative 61.8% is our last extension, 161.8, excuse me, okay? So this is the Aussie versus the New Zealand dollar. Now let's one more time drop down one more time frame just to get a clear view of what's going on. So as you see, this trend line and the 50-day moving average is literally parallel, guys. On a 4-hour time frame and daily time frame, we need this to break to even consider bullish, because trading against the trend is extremely dangerous, guys. So once again, guys, April 1st, 2018, Vision FX coming at you guys live and direct to break down Aussie versus the New Zealand dollar. I hope you guys stay tuned, follow us on Instagram, and I hope you guys have a successful trading week. Thank you.